Hi, everyone. Welcome to Tuesday, January 16th. Let's start with the sector review. So today we started the day with a bit of a sell-off. You can see on the weekly chart, we still are maintaining that AV-WAP level from the previous high. There's not enough data here to form another one, so I'm not going to create a new one. But so far, holding the high from end of last year. In terms of volume at price. So, I mean, some weakness, but we don't know yet if this is a minor pullback into support with a further breakout or a deeper pullback. And we wouldn't know that until maybe later in the week. Got to remember that on Friday, we have a major options expiration with a lot of calls expiring and a lot of leaps as well. So that could take away some stability from the market. So something to kind of keep a watch on and not let positions run too deep. If they are hitting your stops, you should adhere to your stops and not try to be a hero over here. So that's kind of the main crux of it, to be on the defensive side. You can see we still have some more room on the S&P to run up if we wanted, but doesn't have to. It doesn't always have to hit the trend lines here. So what would guide us in which way to go is first and foremost is the 5 week. 5 week needs to be maintained in order to maintain that bullishness. So a maintain of 5 week and a break of the previous high around the 477, 478 on S&P could mean we have some more room to run into maybe the Feb and March months of the year. QQQ, again, we have not taken the AV-WAP on the weekly yet, and we are actually holding much above it. Today was a pretty flat day for the Qs. And we are also still holding the 5 week moving average. So nothing crazy to report over here. So far, the sell-off seems pretty tame. Some other sectors, XLK, technology sector. We can see we tried to take these previous highs here, but again, have met with sellers over here. So we are still in this red box and can continue to consolidate in that box. Same thing, 5 week is being maintained, AV-WAP is being maintained. So still on the bullish side here. XLP looks a little bit different. We talked about this resistance here, and that is coming into play. Although it did well to hold the 5 week over here, but as we reported before, we are indifferent about XLP, about consumer staples right now. SMH, semiconductors, we tried to break the previous high here today, and we just kind of went just above it, grabbed some of the stops here for the shorts and used that liquidity, and then came back down and are closing in this candle, but above the previous close from the end of the year. We are through this kind of resistance area that we are marked in the chart, and a close above this could mean that we have more room to run on SMH. If we just zoom out a bit, we have a breakout of this previous level that we had drawn, and it seems like that has some more room to run based on today's analysis. But the week is not over yet. This weekly candle is still forming. We're just in the first day of the week. Yesterday was a holiday, so it's a shortened week, 4-day week. So we have 3 more days to see how this candle closes. SMH we just did. IWM continuing its a bearish kind of move over here from the time it touched the trend line. That was end of year, and has slowly kind of sold off from the 210 level down to the 190. What's interesting to see over here that for SMH we have this top of yearly that is coming into play soon. So that is at the 189 mark, so about $1 away. We could have that kicking in and acting as support to see some bounce here on the doesn't have to be, but that would be where the next buyers, I would say, are sitting and waiting for. MDY mid caps, we are below the 5-week, so remains to be on the weaker side. So no change there yet. So XBI is interesting. So 2 weeks we got rejected in this zone. Then the third week, which is the second week of January, we closed into these wicks, but we were not able to close in this area, which is the sell area that we had marked before. The sellers kind of got the best of us and brought this down. Today we are very closely contesting with the 5-week over here. So if we move to the daily and get a better sense, we have lost the 5-day from January 11th onwards. We've not been able to close above the 5 days. So a closure above the 5-day would be key over here on the XBI. And you can see that during this run, there were a few other times. This is not one of them, but this one on 11th of December where we closed under the 5-day, but we quickly renewed it. Then we had one closure on 20th of December under the 5-day, but we quickly renewed it. And here in the first week of January, we had a few closures below the 5-day and kept kind of hitting into the 5-day. But this one looks a little bit different. It would be the first check back to the, I believe this is the 20-day. Yes, first check back to the 20-day since the November run. So this is a bit of a deeper pullback in XBI. And so far the 20-day is holding. So that needs to hold in order for this momentum to still be in play. So a closure below that would mean that it is possible that we have a deeper pullback on XBI. And for XBI, we can see we are still contesting with the top of value here on the yearly. Sorry for all the, can't get it to zoom in properly, but you can see the top of value level is at about 88.9. And this is where we are contesting, the level we're contesting with. So a closure below that for the week would mean to be start getting cautious on XBI here. IYT transports, still looking on the weaker side. So let's go back to the weekly chart here. So we have a closure below last week. We had a closure below the 5-week moving average. And so now it's 2 weeks below. And this week so far, we're still maintaining the lows of the past 2 weeks. But so far, the candle closure for Tuesday is below the past 2 closes. So continued weakness in IYT. And if we look at the levels here for volume at price, the next support on the yearly is a little bit further at 244. But if we look at the monthly, we can see we're contesting with the bottom of the month. So so going below this, if we just put an alert below this, would mean that we have some possible further weakness, maybe down to this the VPOC at 232, which would still be above the yearly value area. So there's some room for it to fall further here, IYT, if it doesn't get a bounce on the monthly here. And similar, XLI is very similar. So I won't go through the detailed analysis here, but a very similar setup on the short side for XLI. XLU utilities, similar to what was it? XLP, yeah. So similar to XLP, we have this like huge overhead resistance here that we have to get through. XLU seems to be the demand for XLU utilities seems to be not as strong. So the sell side resistance here hitting it a bit harder. It's losing the 5-week as well, whereas XLP is able to maintain that 5-week. So some extra weakness here coming through on the XLU compared to the to compared to the XLP. XLV. So today we had a bit of a sell-off here in the XLV in the healthcare stocks. If we take a look here, this is the previous area where buyers and sellers kind of fought, and then we broke through from here. Now we're doing a check back. So what remains to be seen is if this check back fails, then we might have below 138, below 138.5 would be a danger area. It could be that we do consolidate in this area for a bit and allow this 20-day moving average to catch up, and also provide support at the bottom of this demand area. So a lot could happen here, but to keep a keen watch, I would look at two levels. A closure below 138.5 is what I do not want to see on XLV, and definitely a loss of the 20-day moving average is something I don't want to see, because that could mean that we are going to check back at the breakout level again before we move higher or break down from there and start moving lower. So some critical levels coming through. Loss of 5-day today. So the first kind of loss of 5 days since a while ago. I would say since the breakout, this is the first time we have lost the 5-day on XLV. So keep a keen watch on those levels. XLF, so 38 level, we discussed there could be sellers sitting there, and so far they seemed to have the upper hand. So some sell-off coming in on the XLF on the financials. ITB, home construction, we were not able to take the previous highs. Now we're back in these levels where there was a gap fill. We did have a gap up here, and now we have closed that gap. So this can now be removed. So today on the ITB, we basically just had a gap closure. So what remains to be seen now is for tomorrow, do we pick back up here, or do we further go down into this gap area? And you can see this gap area was not fully closed here. We just turn around. This was the first week of Jan when we started to close it, but we turn around and we could, so we could, if there's more bearishness, we could come back in the 96 levels and try to close that gap fully on the ITB. XLY, consumer discretionary. Let's go to the weekly. You can see a loss of the 5-week started from the beginning of the year. The next week of the year was pretty bullish, but still we were not able to take the 5-week here. And so far this week we are maintaining those lows, but the 5-week is starting to curl down. So it could be that we check back into this demand area, and also where the 20-week is sitting for some support. This would be at the 166 level. And if we look at XLY over here, we can see 166, 167 is where the top of yearly is as well. So a deeper check back could bring us there, and a VPOC takeout here at the end of the year kind of coincides where the seller showed up here on the XLY. But before we get there, we need to get through the bottom of monthly. So a break of the bottom of monthly. Got to watch that if you want to play short XLY for a couple points here. Consumer discretionary. Microcaps have not much going on, some sideways action. Nothing crazy to report on the microcaps. Then XLE. So the weakness is still continuing. We had a check back of this trend line here, and now we are kind of for many days and for many weeks we have been selling off. So XLE, some continued sell-off coming in. XME, metals and mining. We lost the 5-week. We've lost the 5-week. What's that? Second week of Jan. We were not able to take it back. Today, a much deeper sell-off, and we are coming into this demand area here, which the bottom signifies with the previous resistances, is where the bottom is, and we can see that there were some transactions between sellers and buyers here previously. So we are checking back to the top of that, but a much deeper sell-off in XME. If we look at some levels here, we can see on the monthly we have some room to run on the short side to the 52 level, and on the weekly you can see there is also room to run on the yearly to 55. So you can see 55 would sit right around here, actually a little bit deeper here, and then the 52 would be somewhere here. Yeah, so definitely not one of the best sectors to be in, but a sector to look at for a possible short. You can see we are a little bit extended from the 5 week over here, and if we look at the daily, just give it a minute to load. We tried to take back the 5 day, but the 5 day being showing the trend lower and sloping lower, sloping down. It acted as a resistance. It'll continue to act as resistance until we can curve this up and take back the 5 day for a few days in a row. This would allow the 5 day to curl up and then also get above the 20 day. So a cross here is not great, and so possibly further weakness in the metals and mining. USD CAD is closing above this first resistance level, so that is bullish on the USD CAD pair, and that could go further into the 1.357 area. And TLT, so you could see all the way from November on till now, the TLT had shown strength and had come back up to these levels here around the 100 mark, but it is selling off, and the 5 week is also pointing lower, so it could be continued weakness here on the TLT, which is not great for at least for high beta or growth stocks. UUP had a jump up today, and dollar looking strong like we showed before with the US Canadian exchange rate. Some of the stocks that are holding up well: BSX, Boston Scientific, holding up well today, even with the market weaker. It is up 0.5%. SYK in the healthcare, even though healthcare, the ETF is down today, but SYK holding in well. MOD, Modine Manufacturing. It is a bit extended from the 5 week here, so there could be a kind of check back, but it doesn't have to be right away. You can see that it could trail above the 5 week for a few weeks and then check back. So we could see some further bullishness coming through in MOD. IBM is also not looking too bad. We had a kind of a flag breakout last week, and so far this week we seem to be holding it. ARDX was I believe this is a biotech name, and it had a big breakout, 20-30% last week. So far, I mean, it looked to me initially that we were consolidating this flag pattern, and there could be a possibility of a further break here. But based on today's closure, looks like that flag pattern is breaking out, or it might be consolidating for a longer time. So it might build out another consolidation pattern here. So nothing to do, just keep a watch on ARDX here. Groupon lost this kind of channel that we were in. There was huge volume on Friday, we could see, but we were not able to take the top over here and fell down and closed kind of almost at the same as the open. And today we lost this bottom trend line that we have bounced from all the way from the beginning of November. Microsoft still holding the if you want to call it the breakout or the new high over here from the previous high of 30th or 29th of November. Today, so a little bit extended from the 5 day here. So a pullback could lead to a deeper pullback around the 580 mark. And But the thing here is, if we look at Microsoft, you can see that there was a tight consolidation here, a tight consolidation and breakout, and then the 5-week curling right at the breakout level. So what would be completely normal is to see, if the market pulls back, is to see a check back here at the 379 level. But a pullback, this is the daily chart, so a pullback deeper than that, and especially if it loses this trend line over here, would mean that there could be a deeper sell-off in Microsoft. But so far, nothing that would point to a loss of trend for Microsoft. And finally, I'll go over NVIDIA. That's something that broke out first week or second week of the year. And we had a strong breakout with a follow through for a few days here, all the way from the 506 level, 501 level. Today, closing around the 560 mark, it tried to go a little bit higher, but selling off, with the 5-week moving right under it and supporting that breakout still, and no closure below the 5 days. So this still remains in a bullish this thing. AMD was interesting today. It was consolidating kind of in this, I wouldn't call it a very known pattern, but it was some sideways action. It did not lose the anchored revap from, this is from the beginning of the year. We could extrapolate and look at where the AVWAP for the breakout lies. Let's just do that right now. So you can see the AVWAP for the breakout lies much deeper, around the 130 level. So what would be needed here to continue some bullishness? Well, today was an 8% up day, so that itself is very bullish. We are above the 5-day moving average here. If we look at the weekly, we are above the 5-week, but we are stretched. So a check back, a lot of times the breakouts do have check backs. So check back here, and then further continuation for AMD would continue to be bullish, but the whole market, especially the semiconductors, pull back, then we could see a check back to the 144 area here. Or if there's a deeper pullback because of the options expiration this Friday, we could see a check back. You can see all through this rally that AMD has checked back to this anchored revap. This was back in the beginning of December. So a further check back here, a deeper check back to the 130 would not be out of line if we have a deeper market pullback. Finally, going through Tesla, it has been kind of bearish ever since it was not able to take this trend line, this upward trend line, and act as that resistance. I know there's a lot of lines on this chart, but if you kind of just bear with me here, this was the pattern that we had established from the 2023, this whole pattern. We lost that pattern in October, and the whole market went skyrocketed from beginning of November to the end of the year. But Tesla was only able to do a check back here and not able to take back this trend line. So that itself showed all the way from 260, a lot of weakness coming into the stock. And this has been an area, the 210 to 220 area has been an area of where buyers have previously shown interest. There could be some consolidation here, but so far looking weak on Tesla. Okay, hopefully that was helpful. I'll see you guys tomorrow.